first thing I do in trading is to be able to identify where market is coming from and then where market is going. So how do I know where market is coming from? I go to the daily time frame. When I go to the daily time frame, I know how market structure is drawn. So when you look at this point here, market started from 2019-17 April. It was an uptrend, then now a downtrend. So if I see this, I will now draw my lower high of that period. So for instance, this is the lower high, the higher high. This is the lower low. So we call it identifying high of the day and low of the day, or high of a period and low of a period. Now the next thing I look at is I will now spot the possible highs within the structure again. So the possible high and low is, this is another low here, major low, and then this is another major high. At these whole highs, they have a zone. So you will now use this. So this whole place are the higher highs in this whole structure, creating a zone. Now, before you get a zone, it's all about a support having multiple supports in it. That gives you a zone. So I identify this as a zone. Now, the same way I can spot a zone at the above here too, which will give me something to this level as the higher high zone. Now, before market move, we call it has to create a demand and supply before market moves. So if market is coming to move on demand and supply, what are the things that you need to see? You must see a new zone created. Now, a new zone being created validates a movement of market structure. So beneath, this is my zone. Good. So 8608.9003 is the support zone. And the one that is validating it is the current move that confirms a bullish move of the market. Now, when you zoom out, you realize that price has been on this support for a very long time. Let me just annotate it for you to see. Price has been on this support for a very long time. But before it moved above, it created this wick. Now, this wick is what we call the manipulation. So that wick or that push down is what we call the manipulation. So when it comes to the demand and supply traders, they enter the market after this move or on this particular move. Now let me validate that for you to see. So validating that, I will add, I have my support and resistance zones already. When I add it on the daily time frame, you realize that what I have spotted for you was a new zone that created on my automatic support. So I will now enter my buy. Now, you do the same thing on other or the smaller time frames as well. So let's now move to what I will do next before taking this particular trade. So now I'll go to the smaller time frame. Let me take off this out. So I'll now go to probably 4-hour time frame and be able to get higher highs at the same time. So when you look at the 4-hour time frame, it validates it at this level. So all these consolidation are the manipulation that hand stop losses. Those who don't know how to position their stop losses, this actually break them or take them out of the market before market move finally. Now, somebody will ask, so where from here people are stopped out here? Let me annotate. Let me show them to you. People are stopped out here. People are stopped out here. People are stopped out here, which is the last. And the last move was people are stopped out here. So someone will ask, so how do I know the exact move of the market? Until you see a lowest low. Until you see a lowest low and another low is created. That is above, which is more or less like higher low. Market direction is not confirmed. So market is going down and you wanted to buy, or you feel that it is buying. Even before you think about pattern, you must see the structure as it is going down. The next lower shouldn't be lower than the previous low or the previous lowest. So that actually helps you identify the market structure because you are looking
Hello,
for. Yeah,
hello,
hello.
hello. Please, that part that you said that I need to look for the lowest low
Mm.
before I buy. Do you mean that other lows? I've been seeing other lows. So, but before I should enter, I will make sure that the one I want to enter is lower than the other ones, right?
No, for example, let's say you see this level here.
Yes,
Okay, it's low, right?
yes,
You see this whole level here
is lower.
is lower. Now,
Mm,
before you buy, market structure must not be lower than this.
really?
Yes.
Okay.
Now, for instance, so after
But you
this,
know that market is still moving, so I will never know the lowest it will go.
exactly,
Sure, you know, I can only
yes,
know the previous one, so there's no way I can know the next one. So
very good.
that's where the issue comes in. Before I
Yeah,
will know that
that's
okay, it has squished here or maybe to go up. Before it happens when I was trading yesterday that I was thinking it was going low, it has gone lower than other ones. I was like, let me enter more. When I entered, that was when it now starts going lower and lower. I was like,
okay.
this market is a confusion. So
Okay. So this is it. For instance, market is coming from here, okay?
mm,
Then push up, correction, okay? Then they do impulsive again.
mm,
When you do this impulsive, what is the
mm,
expected point it will reverse to? It reverse to this level. Okay. Now,
okay.
after this, market push down again. What is the next movement? Maybe the next movement you anticipate it to come back here, but it only come to
Yes,
this level.
yes.
Now, the momentum it used to come up will decide if it will break this level or not. Now, if it break
Mm,
this level, what do you expect? You don't expect it to come back here again. So it means
mm.
that the next lower will be lower than the previous low.
The risk no.
Then
Okay.
the channel will change to higher high in that order.
Okay. So now this V, the
Hmm.
last V, that's where I will enter.
Exactly.
Not that not this lowest again. It
Yes,
was here. That new formation. Okay, okay.
exactly.
Yeah, that one
So
I draw. That's where I will enter, right?
yes.
Okay, okay, okay.
Now at this point,
Okay.
you have to correlate candle formation and market structure from the previous formation. You must also look at before the new formation. Are we looking at a fake out or a breakout? Now, when it happened this way, this is what happened. A lot of people will be selling here. Then they will put their stop loss somewhere here and put their take profit somewhere here. So they will now lose because market will now has faked them out of the structure. Now, when you look at this,
Okay, now the mistake that most people make is to now buy at this lowest one, right? Then they now
exactly,
put their stop loss at the top.
yes,
Okay. I used to say that is then I used to manipulate my trade, seriously. I'll be
okay.
like, for this thing. All right, let's continue. Thank you.
Now, when you look at it, you realize that there is a trend line that you are anticipating. Now, what other thing people don't look at is that even though they use the trend line, they forget something. So let's say I want to spot a trend line here, and let's say this is a trend line. Now, as this is a trend line, okay, let me draw it well for you. Let me use a proper structure. Let me use a proper structure. Okay, so let's assume market structure is here. Okay. Now, as the market structure is here, let's say this is the top, then this is the bottom and stuff like that. Now, when you look at this trend line carefully, you will realize that it has another trend line inside. Okay. So if you are using only the two trend line, the top and the down, which is the red, you will keep making mistakes. So you must add the center one. Some people say control line, which actually tell you how market is behaving in the same trend line, which is the channel. So at this point, you will understand why market didn't touch the trend line. You also understand why market is making a move like this. Now, at the same point, after this, you may also get another trend line in it, which helps you get structures and patterns. Now, when you're looking at trend line, if you want to use trend line to do your trading, then it means that you don't expect to always see an M to look like this. Sometimes you have to see an M that will look somewhere this way, which expect a retest and continue. Because you are using a trend line, so everything you see must conform to the diagonal way as well. But there are points in time that you are expecting to see head and shoulder or inverse head and shoulder. You are expecting to see a pattern that you are not really getting. Probably it has formed, but twisted a little.
Yes, you're very right.
Good. So these are dynamics you have to really look at. That is why you don't just have to trade, but when you come, you spend some few minutes to get the market structure, market formation, the dynamics in the market, what happened at each point. Now, major traders, a lot of traders, what they do, I think is the problem is, for instance, when they come to the PC, they zoom out like this. With all their concentration is just on this period. There is nothing wrong with it, but I don't do it like that. I prefer to zoom out to give me the market structure. so that I will be
Yeah,
able
because
to.
sometimes the M used to look like V, especially when you're on the phone. I will have to be
Exactly,
looking at it very well. Is this V or M? Because I understand that if it's V shape, that means it's like going up, and if it's
exactly.
M, then it's coming down. So, but if you can't even identify that one, it's very dangerous. It happens.
Very
I
good.
have to zoom out so that I will see the main structure. You're right. Yeah.
Now, what do you think will happen to people here? A lot of people will identify this to be a W. So they will jump into a buy here. So let me
Exactly.
just,
It looks like W, but how will somebody? In fact, I don't know. Is there something that you're using to know? There are sometimes it should look like W. You'll be like, this is W, and whereas it is M.
yes. So what happened was that when you see a W, do you know the anatomy of the W? When you see an M, are you able to identify the anatomy of the M? How will you identify the anatomy of the M? Fine. That is the question. Now, before I validate this structure to see this as a W, I want to know, where is market coming from? Where market is coming from, is there really a need for me to spot a W at that level? Now, the same thing
Hmm.
repeated itself here. Now, for you to be out of this danger, what is happening here? There was a support that was broken here. Now, market came to test that same support. So it means that support tend to resistance confirmed here. Then support has a second touch. So if you look at it carefully, this become a zone. At this point, you apply the law of demand and supply, not the law of supply and support and resistance. Now there are two things here.
Now, wow. Okay.
You
Hmm.
say now,
Now I know why people are losing out because the market is indeed it's not favorable to learners.
yes. So what happened is that I know the law of supply and demands and how they work, and then the law of support and resistance. The two are not the same because they are indirectly proportion to each other, but you must know how to apply them in the right way. So for this structure, let's zoom back a little. Okay, so now from 2021, from February, market didn't respect here. It only created a zone above here, a touch here. So let's zoom out a little. Let me spot here and spot here. Then we are looking at this structure. Then I will zoom out a little again. So when you look at it, historical data did not project how many time market respected this layer for you. So when you now look into the equation, you realize that those who know W, before you validate here to be a W, you must expect a retest. But another thing is happening here. Where are you? Good. Another thing is happening here. Now let's try to spot it. Let's say we get it from here, touch here, then we got it from, oh, sorry. We got it from here back, then it pushed down direct. It pushed down direct. Good. Now when you look at it, it looks like a W.
Yes, it looks like W.
Very good.
No
Now,
doubt.
no doubt, because it created a zone. But the question is that Is it a valid zone or not? Let's see the confusion. You know, we have the shoulder line and the neckline for a W. So
Yes.
how do we identify our neckline? I think we'll look at it from this level. So if we are expecting a neckline, we are going to look at it from this level. Now, before we anticipate this neckline, what we are trying to look at is that there is a structure here that
Yes.
that devaluated or disrespected this neckline already. This move, push down and push up, has
It now makes it look like
devaluated.
M again.
Very good. It's no more that again. So market structure here has turned to the opposite side to take effect here. That is why it do accumulation in a diagonal way to break that particular zone. So how will you trade this? So if I am a demand and supply trader, I'll get my entry here, expecting to break out or take my profit here. Then you realize that it's now validated. This move is clear. So everybody can catch this move. Because it broke this zone, test it first, make it the first touch, then the second one is a little bit above it. The market structure respected it. So after this, you make your decision on these 3 candles here and enjoy your sell market. Question?
Okay, now you said you are going to end it at the top, which means that you are going to sell.
Yes.
Take your cursor back to that place that you say if you were to be a demand trader,
This level.
that you enter there.
Yes.
And that you will sell.
Yes.
So what did you look at there for you to say is a supply zone? I want to know what is it that I used to hear that demand and supply zone. I know that demand is below, then supply is above.
Very good.
So what did you look at that determines it to be a supply?
Okay, that's fine. Now, you realize that there is a structure here, this level here.
Yes.
Yeah. That was broken and tested at the same time with this candlestick. It was broken and tested at the same time.
Yes,
So
yes.
when you
Yeah.
go to a smaller time frame, you'll be able to identify what actually happened here. That is why we always recommend MTFA, multiple time frame analysis. That is why we recommend pattern in pattern analysis. Pattern. Then we recommend pattern separation.
But you can't find all these things in MT4.
Okay, these are normal structures that you spot and separate. Just like you want to do, let's say you are going to do surgery for somebody. You have to, after you dissect the person, before you dissect the person, you have to do physical examination and know, okay, where will I cast, where will I do this, where will I do that before you dissect the person. So I think forex trading should be how will I put it? Forex trading should be able to be looked at that level too. Another thing I also look at is that after this test, market didn't go back directly to this. So why will I say I'm still going to sell here again? Now, when you look at the movement here, I think people will say they spotted what we call teaser top here. I'm not really a fan to chew candlestick a lot, but I think they will say they spotted a teaser top at this level. And then before this structure happened, we have another retest here. Let me change this to, we have another retest here, or a correction. When you go to 15-minute time frame, it will be a clear correction. Okay, before market continue pushing up. Now, as market continue pushing up, it validates here as a price resistance. Now, this then validate it as a zone. Now, for the zone to be validated properly, this push down to confirm it. So we got the confirmation from here, this level. Now, which candlestick is there? If you are a candlestick trader, this candlestick, you are a candlestick trader.
This is it not is it bearish engulfing?
It looks like engulfing, it looks like harami at the same time.
But I know it's not tweezer at all.
Yeah, it's not tweezer. But the question is that, why is it that candles, the movement of the candles are short, and all of a sudden we got this bullish move? That's the question. So a lot of people say, oh my goodness, the move is about to pick up. Then they want to jump into it. But in support, in demand and supply, we have what we call bounce and break, where you are able to use the momentum of the market structure to know if market will break a zone or bounce a zone. So all these formalities and formation goes with the decision to be able to identify market structure. Another thing is that market is already a downtrend. So as a trader, you must already is a downtrend, or it is forming a downward trend. So what do you need to do? So at this point, we can see here to be a range from here. We come here, can be recognized as a zone, a ranging market in a direct proportion into level to level. And at this point, market broke below. So we can see here to be what? A rectangle, which is a bearish rectangle. Price broke below, continue selling. Another law says, do not trade when market is ranging or consolidating, or you only go for scalp or short trade. Now, this is a 4-hour time frame. So a lot of decision can be made on 1-minute time frame, 15-minute time frame, 1-hour time frame. But when you come to the 4-hour time frame or daily time frame, it is okay. Let's go to the daily time frame. You go to the daily time frame, it shows clearly that what is a correction. So impulsive, a little bit correction, impulsive, correction, then correction. So this whole place is a structure to make a decision. Market is working to make a decision before they continue the next move. Please, are you clear? Are you there?
I mean, I'm actually talking. Oh, I was omitted. Yeah. I wanted to ask a question that in some cases, those time frames, some places you will see yourself that is selling, while in some time frame. So my take was that, is it that in those time frames, some have not completed their market structure, so that's why it's like that. Because especially in 1 minute time frame, it's mostly on buy, buy, buy. Mostly it's always on, as if it's going,
Okay.
is in buying state.
Yes.
So I don't know. For
Yeah,
a what's
that
it?
is another correction many new traders have to make. You must be able to identify what market time frame or what time frame is actually in control. For instance, when you go to boom 1000, if you look at the daily time frame yesterday, a lot of people would have been selling, 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 selling. But per weekly time frame, it's a bullish market. So we took a buy. Someone was like, it has bought. When you look at 1 minute, you realize it has bought. So we have to expect a sell. At the same time, if there is something really called manipulation, definitely broker knows that everybody will be jumping to sell. So they have to hold
Hmm,
market there and range a little. There must be a ranging market there for a little bit, or consolidating or a choky market before the next direction is determined. So when you are trading on 1 minute, no matter what the situation, before you start trading, come to the
yes.
daily time frame, be able to
Okay.
know what is happening for today.
Okay.
Are we expecting a bullish move or a bearish move? How
Okay.
did the daily time frame candle form? But before it formed, how did the last candle close? Now, when you know that,
Okay.
for instance, when you look at this particular pattern here, this level, when you see how this candle ended, you see how this also ended, and you saw how this ended. What do you think is happening next? Market have to sell the next day. It's automatic.
Hmm.
So you know that, but then you go to the smaller time frame and there's a bullish move, then you are able to identify the layers of your structure to determine the next action to take. Then,
Okay.
where are the supports? Where are the resistances on the bigger time frames? So all this area is a zone, because this is a daily time frame. Where are this is a resistance? 1, 2, 3, and 4. But the best fit is this is the third one. So when you see this third one, let's say you are making a decision in April, when you see these two candles and you are looking for a bullish momentum, you are selling at the wrong side of the market.
Hmm.
And another thing is that it is we that don't conform with market structure, because for instance, in synthetic market, there's nothing like fundamental analysis.
Yes.
So at this level here on the daily time frame, is a reasonable thing that needs to happen to give you a continuation pattern. So we got a continuation pattern at this level where market is now respecting that. So that is what we need to always look at when we are making our decision trading.
The technical itself.
Please come again.
I was saying that it's true that there's no news, but the technical itself, one has to be very, very careful
Exactly.
because because news is even once in is not news is not every day. But
Exactly.
the technical, you have to be good at it, because look at ordinary the structure now. We are being confused whether it's M or V. That's
Exactly.
alone, as simple as what we can see with our eyes, we are still doubting if it's so. It's kind of different. So now, can we talk a little bit about the mindset stuff too before we go ahead with this, because I'm very much interested in that too.
The mindset of a trader. Okay. Before we talk about the mindset, how many years do you take to become a lawyer?
Hmm. That's if care is not taken, about 6, 7, because you still
Six.
use your you see it's like 5 years in university, you still go and do one exam, either MBA or so, that 1 year. After that, we still need to practice.
Okay, before
So
you are
it's over,
licensed.
exactly, it's over 5 years.
Okay. How many years will you use to become a teacher?
Let's say around if you go to university, it should take you over 4 years too, because you still practice.
Very good. So, accountants, chartered accountants, bankers, those are the working at tailors. How many years do they use to get to that level?
Those are like minimum of 2 years, minimum.
Okay, 2 years minimum.
Minimum.
Now, people want to trade within 2 days.
Hmm.
So how possible would that be?
They'll keep blowing their accounts,
Very good.
definitely.
I am still learning. I'm not
And they'll be
chasing.
full of anxiety,
Very good.
especially when they bring the mindset of get rich quick. That
Exactly.
mindset can destroy somebody.
Very good. Now, the first mindset is, are you going in to make money or you are going to lose money? It's
Hmm.
only two things here. Do you want to make money or you want to lose money? Aside losing money, you cannot really do anything in Forex. You either gain or you lose. Now, how are you going to control yourself to be able to make that money or to lose that money? As far as losing is part of the game, winning is part of the game, then means that losing is also part of it. Now, a lot of people use theories to, everybody has their own rules and stuff. For instance, let's say Adam Koo, I follow Adam Koo a lot, but he does not use trend line when he's trading. He only uses support and resistance. He doesn't use diagonal because his point is clear. Not everybody can spot it right and then be able to draw it well. So the condition in which he is, probably that is comfortable for him. But does it mean I should closely do what he's doing? That's
No,
another
you do
thing.
what works for you.
Exactly. So when I started the market, I actually a year now, a year and a month today. Is it today? Yes, a year and a
Really?
month today.
Wow. With
When
all this knowledge, you just say yeah. That's so fast profit. That means you were consistent.
yes, a year and a month today, when I take forex trading as a whole job. When I started, the first month mistake I made is what changed the whole decision making for me. Now, if you want to become a millionaire, what do you do to become a millionaire? Already, if it is that easy, people would have made the millions already.
Sure.
Unfortunately, there is nothing easy.
Yes, and people don't want to do things that are hard. So that's why those that do the hard things are making money easily.
Exactly. Now, my mindset is my yesterday. What controls my today is my yesterday. So, yesterday I entered the market. It didn't go well. Why didn't it go well? That is what I have to now come and look for. What didn't I do right? So I blame myself, not the broker. Every losing trader always blame the broker. Oh, it's my laptop. Oh, it's this, it's that, it's this. So with all those excuses, you realize that we keep blaming. Now, the more you blame someone, the solution is by the right hand side of yours, but you end up looking for it somewhere else. That is what comes in. So my mindset is, yes, I want to make money from forex, but then currently I wouldn't be looking at how much I'm making. Because if I'm looking at how much I'm making, I won't be able to control my emotion. Now, we have what we call managing your emotion. Yeah, you can manage your emotion. Okay, it looks like I should cry, but I don't want to cry. But the truth is that how can you control yourself not to even look like you should cry, to enable you not to cry? So greed comes in. What discipline are you factoring in? You promise yourself, I want to make 10% of your equity, and you are there. Maybe you are trading with $100, and you're on my
Yes.
platform. Then I give a very good signal for that day, and the signal give
Yeah.
you almost 11% before you realize, oh my goodness, let me hold it, let me hold it. So probably you make 20% by holding it because it happened to be a good trade. The next mistake is that, mark is good. I would definitely take the next signal. But this one, I will go a little bit higher.
I imagine.
There may
By
be
using large,
lot size.
not knowing that can also go against them.
Maybe at that point, the signal is coming to hit stop loss. So what actually happened to you is that you are not faithful to your own self. You are not truthful to your own self. So if there is something called instincts, your own instincts, your own personality, your own idea, your own mindset, your own spirit punish you at that moment. Because what your spirit have heard is that you want to make 10%. Then you say, oh, I'm disrespecting you because the signal is okay. Now, the number of people who can cut their stop, their profit, when you want to make $10 and you see that the trend is good, or it will get to $11, it will get to $20. The number of people who can cut the trade at $10 are the real traders who are trading with purpose and with a reason. Or tomorrow, they know tomorrow is there for them to make another 10%.
Rather than losing everything on one
Right?
trade.
Yes. I always have a question for people that how do you grow $10 to $50 to $100 to $1,000, and from $1,000 you lose all?
It's greed.
It's greed, eh? You
Greed
started
and I
trading with
think risk management. Bad
yes,
risk management.
yes. So for instance, you are allowing the profit to over enter your head. So the money is not reasoning for you. You are no more reasoning for yourself. That is another factor there. So discipline in real life, how you wake up in the morning, you brush your teeth, go to school. If you didn't go, your parents will beat you. And because your parents will beat you, you have to go, even if you don't want to go. The same thing we must do it in forex trading. Because I think I had the opportunity to meet the Reef team when they came to Africa, Ghana. That was June 25th. They want you to be in business, and they want themselves to also be in business, because if you are not in business, they are not in business. So they can't
So that means
design.
it's not like they're always manipulating, because I wanted to ask somebody that is really genuine, that maybe because I'm a learner, sometimes I feel that when I enter, they always go against me or always trying to eat my stop loss. So that thing has stopped me from putting stop loss. So all I do is just be monitoring it. Once I see that I'm not okay, I just close out. Once I'm still little bit, I just close it. So
Okay.
so you mean now that they also want to be in business and they also want you to also be trading too
Yes.
and be
Yes.
making money?
Yes. So now
Wow.
the Reef is 20-year-old and plus. So if there is monetary regulation, people are regulating them. Hot Forex is in the market for more than 10 years. Admiral Market, one of my favorite brokers, they are in the market for more than 19-year-old. If they are really manipulating the market, will the regulators allow them to still be in business? So who are those who are making the profit? Okay, so what happened to somebody who entered a sell here exactly and hold the trail till today? What happened to that person? Why didn't they move the market to a buy? I don't know if I'm making sense.
Yes.
Yes. So if you jump to the market and then let's say market is coming to make a pullback. Market is coming to make a pullback and you don't know. Many traders, what they do is that as market is making an impulsive move, they won't wait for it to come back like this before it goes. Once it's making an impulsive move, oh, it's buying, then they jump inside. At that time, market is ready to brief. When you are briefing, don't you brief out or do you just brief one way? No. Even vehicle, when we are driving car, first gear, vroom, rest. Then we go to the second, then we go to the third, we go to the fourth. The same way the market move. So when you now entered, and let's say market is trying to create, let's say, come back to this level now. Before going back to this level, before coming down here, then you now buy here, or you bought here. Let me change the color. Let's say you bought here, thinking that it will come here. Who is the cause?
It's me now.
Good. Instead of you to wait after it finished doing this, then you enter the buy. Yes, even though it's going to buy, but wait, don't buy it when it's almost at a peak of reversing. Now, those who do that, they mostly don't see the left side of the market. They are only looking at the right side of the market. I look just like when we were growing up, how did they taught us to cross the road? They said, look
left and right. Look left
right,
again.
then look right again. Which means that the same forex trading is a road we are coming to cross. So we have to look left, look right, and look left again because the market is coming from the left. So I will encourage you to take your stop losses. I will show you, I think tomorrow, if we are learning again, I'm going to teach you how to set your stop loss the right way. Do you know why? There is no hidden information in trading. Every information exposed. We know what we call market manipulation. We are going to buy, but we want to sell small. But then you buy when we decided to sell small. But you can also put your stop loss in a way that even if we are selling small, we won't kick you out of the market. It is there. You are aware. So why will you now say that? Because you are not setting your stop loss right. And with that, you end up losing money. Or you enter, they stop you out, you enter, they stop you out, you enter, they stop you out before you go. We also know in institution trading concept what is an order flow, then accumulation phase, and all those things. So when you practice all these, in fact, 1 hour is less than 1 hour. So when you practice all these things from 1 week to come, your whole trading journey will look different. And I'm very sure you're going to make a lot of money.